Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock. With news, China is back after a long holiday, only to find the cost of a core commodity it needs is very much higher. But first, it is Groundhog Day in Washington, with negotiations to fund the US federal government stalled just days before funds run out on their 3 weeks old previous agreement. The same sticking point, funds for extending the border wall. In Canada, employers added 66,800 jobs in January, far better than the gain of the 8,000 that analysts expected. The Canadian jobless rate ticked up, however, to 5.8% as more people sought work. The Canadian currency rose on the news. It was also bolstered by a better-than-expected housing start data. And there was data out in Europe. The German trade data actually came in a bit stronger than expected, with both exports and imports rising, while their trade surplus eased back a bit. The French industrial production data, however, was weak as expected in December, but not as weak as the prior month, and Italian industrial production data was similar. China is returning to normal today after their Spring Festival week-long holiday. The mood will be interesting to assess. Many indicators are weak, but not all. The pace of official stimulus will get special attention. And China loves public-private partnerships. They're reporting that in 2018, a total of 8,654 public-private partnership projects had been registered, worth $2.9 trillion. And the price of iron ore, a key ingredient in the Chinese market, is rocketing higher. This is despite the China slowdown. The dam disaster in Brazil has triggered a sudden supply shortage, extended by Brazilian outrage at the miner, which may further reduce shipments from more mines while there is remediation work undertaken. Brazil is Australia's largest supply rival to China. But on the flip side, this now means that there is a sudden drought in demand for iron ore carrying ships. The Baltic Dry Index, which measures ship charter pricing, has plunged now down to 2016 lows. This is a sudden 56% drop since the beginning of 2019. US Treasury 10-year yield is lower at 2.63% and back to where it was at the end of January. Their 210 curve is just on 17 basis points. And gold is up $4 to $1,314 an ounce. US oil prices are unchanged today at just under $53 a barrel, while the Brent benchmark is just over $62 a barrel. And the Kiwi dollar is starting the week little changed in offshore markets at 67.4 US cents. On the cross rates, we're at 95.1 Aussie cents and 59.6 Euro cents. That leaves the TWI at 71.9, where it's been for the past few days. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.